Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market, so hopefully you can better your portfolio. We continue to see improvements not only in the U.S. economy, but in some of the emerging market economies. Specifically, if we look at China, China basically cut their money for their bank reserves by another 0.5%. This is the second time they've done this in 90 days. What they're basically doing in China is they're basically trying to create some additional liquidity as they've seen their inflation fears kind of taper off a little bit, and they've seen their growth slow down just a tad. What they're trying to do is put their foot back on the pedal. Typically, when any country raises interest rates, they're doing that to curtail inflation and over excess, and China did exactly that over the last, say, year and a half. Now they're taking their foot off the brake, they're putting it back on the accelerator, in my opinion, and I think there's opportunities for China to continue their prosperous GDP growth. We've seen similar stances around the emerging market economies, where a lot of these economies basically were over accelerating and they want to make sure they curtail inflation, so they'll do the same type of maneuver where they'll raise rates. Now that things have kind of settled a little bit in, and as we've had some of the word yesterday about Greece and their package officially being announced or signed off on by the Greek officials, I think what we will see is one of the emotional deterrents taken out of the overall economies around the world. And while there's always going to be issues and problems, as I've always told investors, your emotions are a bad indicator on how you should invest. I still receive just dozens of calls every single week on my radio show, into the office, emails, and the like, from concerned investors, of course not our clients because we are managing their money and running an investment strategy, but we're seeing a lot of these calls from potential clients who really are getting absolutely no direction whatsoever. And unfortunately, some of these investors actually are do-it-yourself investors where they're handling their own money and have done just horrifically poor. And part of that reason is they throw the emotion side into it. I had a comment from a gentleman just a couple days ago, and I just thought I'd share this with you. He said, Brian, you know, with all the stuff going on in the world, and I just, feel that the whole world is going to collapse one day and we're all going to be broke and destitute. I told him, I said, that's your personal opinion, and that's not an investment strategy. What I tried to talk to him about was we've always had wars, we're always going to have wars. We've had many recessions in 20, 30, 40, 50 years, and we're going to continue to have recessions. We're going to have contractions, we're going to have acceleration periods, we're going to have high interest rates, low interest rates, we're going to have terrorist attacks, unfortunately, we're going to have missteps in government around the world. But if you take a look, folks, over the last 10, 20, 30 years, go decade by decade, people in the world have always prospered more than they did the decade before. I don't think it's going to be any different. The only difference today than what you saw 10, 20, 30 years ago is more media, more news hype, which to you, the investor, maybe gets more concerned because you're seeing things that have always happened, again, maybe at different levels, maybe at lesser or more levels, but at the end of the day, the same things economically around the world continue to happen and will happen throughout your life, your kids' life, and your grandchildren's life. So nothing really has changed. What has changed, I think, is people's emotions are a little bit more heightened because of the news coverage, which again leads you to bad investment choices and in bad investment decisions. As I've always talked, if you don't have an investment strategy in writing and you do not follow it, you have no investment strategy at all, and unfortunately you're shooting from the hip. Even our strategy from time to time will have little trip-ups. No investment strategy is perfect, but the key is, has that strategy worked through multiple market cycles? Yes. And if it has, to me and in my opinion, that's a good indicator of a successful investment strategy that will have the opportunity to reap its rewards in the future. But the sad fact is most investors are basing decisions on emotions versus any real strategy. This is Brian Resney. If you're concerned about your money and you're a non-client, we always like taking on nice people who want to better their situation. Call our office. Remember, your portfolio is not going to fix itself. If you're a client and you have questions, make sure you do call our office. We always love talking to our clients. And make sure you do listen to this Sunday show. We're going to talk about some interesting topics, not only about the world investment markets, but right here in the U.S., what I see, what I like, and more importantly, areas that I would avoid. This is again Brian Resney. Make sure you tune into my Sunday show. And again, if you're a non-client, call our office for a consultation. We always like taking on new clients and helping you achieve your retirement and investing goals. Have a great and prosperous day.